All right, hello everybody. Today is Friday, April 5th, and we are bringing you a Block Digest special edition with a couple different guests actually. We decided to do an impromptu special edition with Max Hildeberg joining us from World Crypto Network, Adam Gibson, one of the most awesome Bitcoin OGs, and another epically awesome Bitcoin OG, Chris Belcher, or Belcher, I guess. I've always pronounced that the other way, but how's it going, guys?
Oh, good. Thank you. Yes, we're here at the Understanding Bitcoin conference, and it's always nice to meet up with all the Bitcoiners. And here, I think we have a great panel. So good conversation about Bitcoin and privacy.
Alrighty, so what's going on new, guys? I mean, I have a whole slew of ideas. First off, since Adam, you're there with no para, would you like to help me berate him for trying to find excuses not to implement Lightning and CoinJoin XT and Wasabi?
Oh, well, no, I can't berate anyone because I'm so lazy. I've barely even written a basic proof of concept code for it myself. So, but yeah, I mean, something like that's going to happen one day, I guess. Let's hope. Yeah.
Yeah, it's definitely coming in 5 years, maybe. Yeah, first I'm waiting for people to write a book about Lightning Network development and then figure out all the nitty-gritty stuff, and then I implement Lightning Network, and then maybe something. Yeah. All right. How about we talk about the conference first? How do you like this conference so far? For context, this conference was organized by Toneways, Giacomo Zucco, and Adam Beck. And how do you like it so far?
Yeah, it's very nice. I can see hopefully it'll be really helpful to all the new people in the space who want to learn how to set things up. I think my favorite part is the demos where we just had Christian Decker show us installing Lightning on a Raspberry Pi, which is quite nice. So yeah, stuff like that. I've been quite interested in the whole thing.
Yeah, I agree. Well, I did not yet watch all the talks because they will be recorded. So I took the time here, as I always do, to talk to the people and accumulate knowledge this way, because that is always why I'm at conferences, just to meet these awesome people and to have great conversations. And that is always a joy. And especially at this conference, it's just full of great people and a very high volume and low noise. So unfortunately, no ICO pitches, which are sorely missing. But I mean, maybe tomorrow. Let's see. But I agree also the workshops or demos are going to be nice. And tomorrow also some workshops, or no, Sunday. So yeah, good to have the knowledge archive being increased as all these shows are being recorded. And yeah, it's a joy as always.
Yeah, I second everything I've just heard. Yeah, high signal to noise. I wonder if sometimes I wonder if like the bear market has an effect. After about a year of bear market, you start to just there's no idiots around. Well, there's a guy roaming around completely drunk off his head, but we'll forget about that guy. Everyone else is absolutely great.
Oh, who might that be?
He's drunk off his head, but he's a Bitcoin maximalist, so that's why he's here.
All right. Let's talk about you guys. Actually, tomorrow we are going to have a panel with me, Adam, and Chris and Jonas Nick. So it's almost like the same panel. Interesting. So yeah, let's start with what. Just give some context. Yeah, probably the digest audience knows you already, but just give some context. What you were working on in Bitcoin so far.
So far, probably my two biggest projects, Join Market and Electrum Personal Server. And Join Market is a CoinJoin implementation that's using market forces to make the CoinJoin peers cooperate and come together. And Electrum Personal Server is trying to be a maximally lightweight Electrum server, so you can use that wallet and have the full privacy and security benefits of a full node.
Well, I'm just blabbering here on the World Crypto Network, so I'll just give it over.
Yeah.
It's good blabber though. I think you've got an excellent voice for that kind of thing, and it's really clear. I've listened to a few of your stuff. Yeah, I work on join market. The only other thing I do is kind of a bit vague, but I've worked on kind of documentation and sort of research for different privacy technology as well.
Yes, and then maybe I'll continue asking, like, why are you doing this? Why are you dedicating your time and giving it away freely to work on privacy in Bitcoin? Why do you think it's so important?
Well, my motivation is I was bored, uh, and I was just looking to work on something cool. Uh, and actually, it was Join Market who I started to work at first on, but then I went into issues not with Join Market, but with connecting Join Market with my C# code, and I ended up trying to rewrite more and more things, and this is how I ended up in a privacy rabbit hole. So I wasn't really a freedom fighter or anything like that. like you guys. Are you freedom fighters? Just before, very quickly, Rick and Monkey, feel free to say something when you are
Something.
You're not giving yourself enough credit, man. You are one of the freedom fighters with us there.
Mm-hmm.
But yeah, I've been watching the stream of what's going on with this conference, and it is good to see another conference come together where people are actually interested in the tech. And like you're saying, Adam, I mean, it's just that time of the cycle where pretty much everybody here is here for the right reasons. I've seen a little bit of an uptick recently with the meetup attendance here in Colorado. It seems like everybody's getting a little interested as to where we're going. But yeah, I mean, it's just good to see another conference like Breaking Bitcoin and all these lightning hack days, just getting more conferences that aren't so into these offerings and everything that's going on in that side of the space. So yeah, what you guys are doing is just incredibly important for Bitcoin, just improving fungibility and bringing privacy and security. That the whole front here, man, is like, these are the freedom fighters here. This is incredible just to be sitting here with all you guys. So yeah, I really appreciate the time. And yeah, as far as questions go, I mean, what are you guys thinking about with Lightning and coin joins and tumblers and mixers with Lightning Network? Because that seems to be something I've heard a little bit about. And I know, Nopar's got his hands full there with main chain stuff. But what do you guys think about Lightning mixers and services?
Yeah, that's
like
a
that?
huge question. I give it to Chris.
Yeah, well, Lightning is great, obviously, for privacy, and it's I think it's probably the first technology that's been implemented that gains privacy by removing information from the blockchain. So lots of other privacy technologies gain privacy by adding more information. So CoinJoin or Join Market, or even altcoins like Monero and Zcash, they gain privacy by adding loads of decoy data, and that's costly in bandwidth and in disk space. And Lightning is really a step in the right direction, is that you gain privacy by removing this data. That all the old privacy problems of address reuse and the common input ownership assumption and change addresses, they just don't exist in the Lightning Network. It's just not a thing. And that's really great. And I don't know, in terms of combining them with CoinJoin, like, yeah, you could, but I think people now are working on kind of the low-hanging fruit of making Lightning work. And then eventually, I imagine one day in 10 years or whenever, we'll have huge coin joins which all have one Schnorr signature, and they create like big channel factories, and then you have about 1 million channels just in one coin join, and that'll be great. But for now, it's just one transaction opens a channel, and that's that.
Yes, right now there's of course no coin joins directly in the channel opening. But what I did for my Lightning node is that I funded it with a 0.1 Wasabi coin join UTXO with high anonymity set. And that funded a Tor only node, right, with private channels. So that already, I don't reveal any of my previous transaction history from that Lightning node. Right? And then once you are in Lightning and Tor only, I mean, as you say, it removes so much information, and just through then further onion routing and yeah, and all that Lightning Network is just built to be private, and much more coming. Like for example, just rendezvous routing, which will hide whom you actually are sending money to, which is really nice. Because right now already the receiver does not know who the sender was. But with rendezvous routing, the sender does not know who the receiver is. And that is another huge bonus. And then, as you said, channel factories are a coin join in and of itself. And so probably like channel factories with, I don't know if you need to have equal values in order to make it even more anonymous. I'm not certain. But yeah, lots of cool stuff to come.
Yeah, no, I did the only thought I wasn't going to answer your question directly because I'm not an expert on channel factories or anything, but we should just mention like the sales point about CoinJoin and Lightning being the fact that one of the problems of CoinJoin is coordination, right? And you need to coordinate. Everyone needs to agree on an amount, and everyone needs to sort of get together at the same time. But it's nice, even though it could be limited, maybe only 2 parties if it's not L2, but if it's L2, it could be multiple parties. But it's very easy to open channels with a fixed amount. You know, you can use dual funding, and people don't care as much about the exact amount when they open a channel because the channel opening is not the payment, right? So there's these kind of nice little twiddly little details that might make it so there's a very nice marriage between CoinJoin for your main chain, your on-chain stuff, and Lightning for your off-chain. And also, I just want to mention that we shouldn't get too carried away about Lightning. It's fantastic. It does have slight negatives as well as positives in terms of like the security model and the onlineness stuff. So I think it's very reasonable to say that in the near future, we're still going to need on-chain stuff happening, especially for our the money that we own. Let's say the cold storage or the large amounts. So I don't think we can just like yay Lightning and forget everything, and it's just going to mix everything. I don't think we're there. So
real quick while you have the mic, actually, Adam. I kind of wanted to ask you with the Loop Out client from Lightning Labs and the Loop In client coming soon. If you've been thinking a little bit more about some of the constructs that everybody who was at the CoinJoin workshop in Berlin were considering, such as, kind of shoehorning in money to the Lightning Network by actually funding somebody else's channel and then atomically linking that to like filling up your own on Lightning and things like that to kind of further obscure the transaction graph with channel funding.
Yeah, well, something I want to mention on the point of Lightning not being a solution to everything. One thing with Lightning is it has there's the channel capacity issues, so you can't send a payment more than there is channel capacity, which means Lightning works best for smaller payments. And there is actually another scheme I've been thinking of in the last few months. Well, I mean, it's been around for ages, but you could imagine CoinSwap as a privacy technology used for large amounts, and Lightning would be a privacy technology used for small amounts. Because you could imagine a scheme where CoinSwap is used. Essentially, if you want to think of CoinSwap in terms of Lightning, it's you create a channel, send all the money through it straight away in one payment, and then close the channel. And you could set up the incentives of that so that the payment you create can be any amount, could be 10 Bitcoins or 100 Bitcoins or any amount you really wanted. So I could imagine a future where for large amounts, if you want privacy, you use CoinSwap, and for small amounts, you use Lightning. And the reason I think of CoinSwap rather than CoinJoin is I can expect in the future that block space will be really expensive. So something that's off-chain, and CoinSwap is actually kind of off-chain protocol, that will be more efficient. So the amount of privacy per unit block space, you could think of it, will be benefiting CoinSwap rather than CoinJoin. But then, you never know. Things like Schnorr signatures could change it around. Yeah, just that point.
I also, sorry to jump in yet again, but surprised Janine just dropped in. She finally got the link. We didn't hear from her before we went live.
Hello.
Hi, Janine.
So what were you going to go into, Max?
Well, right, of course, Lightning Network, we don't really know yet how private it is because it's still being built out, and it's very much an implementation nuances as well. Because as I think, I'm not certain, but I think that all the routing nodes keep a log of the receiver and or the sender and the receiver of that route. And of course, if all the nodes keep a log of how they have forwarded transaction, that kind of beats the entire purpose of having onion routing, right? Because a super adversary could somehow get their hands access to these logs, and that would, for example, break the onion routing. So like, just because we say it has onion routing doesn't mean it's the magic bullet, right? It is really an implementation detail, and it's just a lot of work to do. So I guess we really have to see how this will play out in the long run when the software is actually being adequately implemented.
Yeah, I mean, but I think things like that are just like, there really isn't going to ever be a bulletproof solution for that. I mean, in the same way that you still have the threat of like a super node, as Nopara put it the other day, kind of making connections on the main network peer-to-peer level to try to like tie down where a transaction's originating from. I mean, you can't really like make a system like this Sybil proof as far as somebody trying to actually de-anonymize people.
Yeah. And the thing with the nodes recording their previous and their origin and destination payments, you could imagine that happening in Tor as well. And I think the security model actually of these things is that they expect that it's impractical for some adversary to go to all these nodes and somehow make them give up this information. But there is actually one, I think, more concerning thing with Lightning Tor routing is in actual Tor, any nodes can route to any other node. So if you have, I don't know, if you have 20 onion nodes that they could route to anyone, the number of combinations is around 20 squared. But with Lightning, you don't have that because you can see the connections between the nodes. So the Lightning nodes have, it's public information, or it might not be, but often it's public information. And you could say, okay, so the package went to this node and they only have six channels open to them. So that's only 6 possibilities of where it could go. So it's the privacy is slightly less good than Tor, but it's still, I mean, it's better than nothing, but it is just something to think about, that it's not, we can't just wave our hands and say, oh, it's onion routing, that's great.
But I mean, it's still like that would kind of address itself, like the more that the network actually fills in. I mean, like right now, that is something I think that's a substantial worry, but the more the network grows in size, then each hop is like, okay, now add another 6 possibilities and then another 6 and so on and so on.
Yeah, at least there's not one possibility, right?
All right, so I think we can pass Lightning because I don't know anything about it. I have so many directions I can take this. All right, I just pick one question. What do you think, how advanced are blockchain analysis companies today? Let's start with Adam.
When he's laughing already.
Okay, I should answer seriously and not just make jokes about it. I think a lot less. They're a lot less sophisticated than people believe. I feel bad saying it in this company because everyone knows a lot about it here. But it's. I mean, obviously they use proprietary techniques, right? So we can't sit down and write a paper and say they're bad because X, Y, and Z, and that they don't actually solve A, B, or C because they're not telling us what they're doing. So we're getting all kinds of secondhand information, but it seems pretty clear that the biggest win that they have is the KYC information they get from exchanges, and this has been in the news recently. While their blockchain analysis, I'm sure, is good in the sense that it's better than what I could come up with, on my laptop. But it might be good in that sense, but it's pretty clear that it's nowhere near good enough to actually create like really high accuracy tracing of coins through long periods of history. It's pretty clearly not the case. In fact, just anecdotally, I think yesterday, I'm trying to remember what I was hearing. Obviously, I'm not going to tell you where I heard it, but something like, somebody who works at some kind of business told me that that business kind of went out to several different chain analysis companies to sort of assess them and that those chain analysis companies, only one of, I think there were 4, could even manage to track coins when actually the coins were vanity addresses. So any idiot on a block explorer could have figured it out. But that's just, I'm trying to, it's an anecdote which I've obviously had to obfuscate, but I'm trying to get across the point that the level of competence may be way lower than you think. And it's mostly about KYC, and the blockchain analysis isn't doing it anywhere near as much as people tend to assume.
Yeah, great points. And I would agree that mainly it's the user who's kind of shooting his own foot by doing KYC or linking his identity somehow directly to the UTXO. So, for example, public donations are another huge thing, or advertising just your addresses on other social media. And I think that is the main adversary is the user itself. So implementing these best practices into the wallet itself is really important, like not reusing addresses or not consolidating some UTXOs. That is already a lot. And then when these basic best practices are being applied by, I would say it's pretty damn difficult for these chain analysis to speak with a lot of certainty.
So you are changing a bit topic or moving away, but I would like to get back a little bit. And Krista, do you agree with Adams, or do you have something else to add?
Yeah, I agree. I mean, they have, as like many startups, they're funded by their venture capital, so they have a big incentive to overstate how good they actually are. They basically say to their customers, if you buy our products, then we will solve all your legal obligations. That you just buy this products, give us X money per month, and you'll never have any problems from the law or the lawyers, and everything it says in this big document about anti-money laundering will be solved for you, and that's a promise. And essentially, that's their incentive. That's why if you look on the media space, it seems that they're so pervasive and all-powerful. But on the other hand, I also don't want to underestimate them, because you could imagine a situation where it might be happening now even, that they're actually slowly collecting all the information they can, and when they think they have enough, they'll start to turn the thumb screws, and you suddenly can't spend a Bitcoin anywhere without, I don't know, being hounded for all your information. So I think I'm confident, but really there's a lot of uncertainty. We don't know. We don't really know who our adversary, how powerful they are.
And they can attack in the future as well, right? The data is there, especially like on the blockchain. Of course, some metadata might not be recorded, but
it's there forever. Yeah. Like there was those people analyzing Mt. Gox in 2017 from transactions back in 2011, and that's actually a great. It was from a conference, Breaking Bitcoin in Paris. It's a really great talk, because they have Mt. Gox was actually doing coin joins accidentally. I don't know if you saw this, because you were allowed to import your own private key, and they'd spend it with lots of other people's coins, and you'd have this huge cluster like co-spent payments, which on many blockchain explorers is just called Mt. Gox and others, because it completely confuses them. They didn't realize it was just coin join happening by accident, in a sense. Hold on.
Sorry. Yeah. I have coins from, I don't know, from join market transactions that are marked Mt. Gox and others. And they were done in like 2015 or 16, 3 or 4 years after Mt. Gox was closed, because they had the clustering is and
that actually tricked the what was that Canadian exchange that went down? Because that's it. That actually tricked one of the analysts, because they saw it said Mt. Gox, and they said, oh my god, Mt. Gox is involved. What a twist to the story. But really it was nothing to do with that. It was just a coin join. So it's easy to imagine situations where analysts believe they know more than they actually know. There's a big thing of all this stuff is it's hard to get to a ground truth. Normally if you're some kind of detective or investigator, you want to have 2 or 3 ways to find one truth to make sure you're not fooling yourself. And in blockchain analysis, it's actually really hard to do.
That's what KYC data collection is about. That's all the KYC data collection at the exchange. That's the ground truth, really, because what they actually care about is human identities, and that's where they get it. So
jump in real quick, guys. I'm actually really proud of one of our viewers, Max, for pointing this out. But the kind of risk of privacy leakage with block explorers. Well, what does Belcher and Adam think about the possibility of chain analysis companies potentially operating an explorer specifically to gather information on users? Because, I mean, at that point, you can effectively get an IP address and a Bitcoin address. And that's information that would sit around forever, that if any kind of subpoena or data leak in the future were to come along, they could actually, just hold that IP address and actually tie it to a legal identity at any point down the road.
Yeah, absolutely. And I wouldn't be surprised if they're already trying to do that. Or maybe if someone like blockchain, if there's, some other existing providers are selling the information, because we know that these services are running their nodes which collect BIP37 filters. Like, we know that they've published about this. That's been going on for years. We know that's a fact. And I strongly suspect they're also running Electrum servers, because we know it's often been a thing. I noticed, well, there was a recent Electrum phishing attack. And I came across, there was an interesting point that actually Electrum servers, there's a lot of sort of overcapacity. So there's a lot of volunteers who we don't really know about, and they all run Electrum servers, which cost loads of data and bandwidth for free. And there's loads of them. And I thought that was a bit suspicious. I bet some of them are actually blockchain analysis companies, because even with Electrum, you get the whole wallet and the IP address usually. So yeah, definitely any weakness I think will be fulfilled, especially if it's cheap to attack.
I totally agree with what everyone's saying. I just do want to mention a sort of caveat is that there's a huge difference between the Electrum server case and the blockchain explorer case. Is that I mean, occasionally people do look at transactions on blockchain explorers that aren't theirs. It isn't. Whereas something like Electrum server, it's really terrible that you just, especially if you just all your addresses at once. Well, it wouldn't necessarily work like that, but it's different. Yeah.
Yeah, and then again, that's just the emphasis of using quality block explorers. And for example, blockstream.info, I've spoken with Larry Newman on the World Crypto Network. I will upload the video soon. And so first and foremost, they have Tor, so you can connect over v3.onion, which is at least obfuscates your IP address. And they do not log any information. I mean, of course, that's somewhat of a claim. And yes, it's open source.
You believe Larry.
Well, but and even then, right? Even if Blockstream is not logging anything, they have a cloud. They host this on someone else's server, right? And then they can keep the logs itself. But that's also why I love Explorer so much, because there's a light mode that you can run on your own full node, even on a Raspberry Pi. And then you have all these features of a really high quality block explorer, but you don't give your information to someone else. And I think that is something where we have to do lots more work of.
Does it need TX index, or what indexing does it need?
Yes, it has indexes, and so the full version.
Its own indexes.
Yes, and the full version has many indexes that prevent the DOS attacks. So if you open your Explorer to the public, you will need those extra protections. But if you run it locally on your full node, you can have a light mode that is much more tiny, that removes a lot of these indices. But if you yourself are not going to DOS your own node, it shouldn't be any issues.
Yeah, there is actually a point that users who use Bitcoin as wallets just for sending and receiving, I don't think they ever actually have a need to use a blockchain explorer, because you could always have your wallet and you see funds are receiving and you wait until it says 1 confirmation, 2 confirmations, however many confirmations. And I don't think you need anything more than that. You don't really need these indices unless you're doing some kind of tracking. So maybe you've seen a donation address and you think, oh, I wonder how many people donated to this guy. And then you can do it for that method. But the thing with also an aspect that blockchain explorers can do is often if people are looking at their own transactions, they can refresh until it gets to 3 confirmations, for example. And that would be a strong indication that they're really interested in this transaction, not just clicking around randomly. So they might make a payment to some exchange and then they press F5 and okay, it's still unconfirmed, still unconfirmed. Oh, 1 confirmed, great. And then they stop refreshing. That kind of behavior, because every time they refresh, that goes to the website, doesn't it? That could be another, those kind of leaks would be something that would reveal to the blockchain explorer what's going on there.
All right, so I was thinking maybe you guys could monitor the chat, and if someone has a question in the chat, then just throw it out. For now, I want to talk about confidential transactions.
Boo!
Huge topic. So yeah, generally, what do you think about confidential transactions, and more specifically, when we will have it on Bitcoin?
Yeah, they're I think they're really interesting technology. And I actually, while I was here on this conference talking to some of the Blockstream people, I mean, it seems obvious, and I thought they surely already know about this, but it would be really great to have CoinJoin on their Liquid sidechain, because CoinJoin and confidential transactions work together really well. And you could imagine maybe they could do a kind of pay join where every time you pay someone on Liquid, it's actually a coin join. And then you could very quickly get to a situation where the entire Liquid sidechain is like one cluster and you can't see any amounts. And that would be really nice privacy. As for whether it will be on Bitcoin, well, there's this trade-off almost, isn't there, between the perfect inflation protection or perfect privacy protection. And to me, it seems like unless that can be solved, it'll be a political problem, because you need 100% consensus, and if that kind of trade-off makes it impossible to get 100% agreement. So I don't know.
Well, I mean, it's really dangerous no matter which way you slice it. I mean, we're either exposing the system to inflation that we wouldn't detect, or you are creating a false sense of privacy where people are going to do a whole bunch of shady things. And then down the line, when the privacy is broken, well, now everybody's fucked because they just assumed like nobody's ever going to see what we were doing.
Yeah, good points. And you always have a trade-off between obfuscation and verification, right? So either you're perfectly private, but then you cannot audit, or you can audit, but then you're not perfectly private. Well, like, roughly-ish, right? And then when will it be in Bitcoin? Well, in 2 weeks, of course. But no, I actually don't think necessarily that we needed to have it on the base layer blockchain, because I think the use case for blockchains is much more consensus and not necessarily payments, or like dispute resolutions rather. So I would say that we can go without CT, especially because these trade-offs are so huge, because we can have on second layer, third layer, and so on, much stronger privacy guarantees without necessarily hurting consensus. But yeah.
Yeah, I mean, this is obviously a topic that greatly interests me. I've written several blog posts about this, and refer to my earlier comments in Lisbon on the same topic as well. And but I mean, I think people should pay attention to the counter arguments. There's people like Ian Myers at Zcash who've made eloquent arguments that we should not have a transaction graph. Essentially that's the problem, and trying to obfuscate it is kind of a fool's errand from his point of view. But my response has been like, well, you can't look at one issue in isolation. Look at the trade-offs. The quip I made was like, oh, well, DigiCash was perfectly private. Look what happened there, right? Because that was perfectly information theoretically private, but because of its centralized nature, it was just never going to work. It was a complete joke. It was a disaster. So it's a complicated question. And well, yeah, I mean, this has been discussed endlessly. It'll probably be discussed again tomorrow, but good comments from all the rest of the people. So.
Well, and with equal value coin joins, and with something like pay to endpoint, we can obfuscate the amounts being sent. So yes, it's not as good as having complete obfuscated amounts, but at least it's something. So I think we can manage with other tools.
Yeah, there is also a thing you can do with CoinSwap, which is because CoinSwap essentially allows the coins to teleport like anywhere else on the blockchain going forward. You can do a thing where you can mathematically work out how much computational power it would get. So for example, say you have 1 Bitcoin that you pay into the CoinSwap and you receive 6 or 7 outputs and they add up to 1 Bitcoin. You can do some fairly simple maths to see if someone were to search the entire blockchain to look for these 7 outputs, they would need to do computational power that's more than 2 to the 80. So, it will take more computational power than could exist in the universe. And in that kind of, I mean, obviously it's a bit of a simplified calculation, but from that kind of thing, you could also get very good privacy of amounts without necessarily using CT, using something else.
So basically your argument is that it's a perfectly binding or perfectly not inflating. But what do you think about the ideas that were discussed on the mailing list very recently? And actually, I was talking about this to you on the CoinJoin workshop. So what do you think about these ideas that you can have a soft fork confidential transactions into Bitcoin in a way that you are always checking the cap? So only the people who are using confidential transactions might, or keeping money on confidential transactions or outputs, might have a chance to lose the money. But of course, it's not that. It's a huge assumption that there is a chance to lose the money. There is no chance, because it's cryptographically secure today and probably going to be for a very long time.
I think that point is often like the framework, and I've heard this even like academics like Tim Ruffing put it that way as well, that you're worrying about the security of this elliptic curve discrete log. Well, of course, that's like a really remote potential difficulty, and if we don't have quantum computers, we're not going to. And even I remember back in 2017 or something, sitting down at dinner with Peter Todd, and he was saying, oh yeah, but don't forget, Bitcoin uses the same cryptographic assumption. Haha. Therefore, your worry is not valid. But the point is that when you hide, this is what I wrote in this blog. My blog is at joinmarket.me/blog, and one of them is called the steganographic principle. And I tried to lay out very explicitly in that blog post, which I think is an absolutely crucial point, that when you have a cryptographic assumption being used in terms of hiding something, the problem is that when it's broken, you don't know about it, right? So I think that problem is absolutely critical, and that's been entirely borne out, in my opinion, by the events of last year, because two things happened last year. One, in Bitcoin, there was an inflation bug, very weird kind of inflation bug. Everyone immediately could check and check that there was no inflation, right? Get TX outset info, whatever. The same year, although it was obfuscated through months of hiding, in Zcash, they had an inflation bug, at least one that could have been potentially inflated, and nobody could check it, right? Because and what was that? That was an implementation error. It was not that some academic wrote a paper where he made a mistake, or the elliptic curve discrete log was broken. They just made a mistake when they implemented it. Actually, I think it was in the paper, the error, but it doesn't matter. The point is, it was an implementation error. It wasn't that the cryptographic protocol got broken, but it was an implementation error, and then nobody knew about it for an entire year, apart from like Zuko and a couple of his friends or whatever. And nobody knows if it was exploited, right? So to me, it's not just about, it's a really remote chance that the crypto gets broken. It's the fact that because it's being used to hide something, which, and the way I put it is, it's like the DNA of blockchains is public verifiability. The thing that the absolute heart of what they're doing is public verifiability. So I think that if we have to be either careful or just completely not do it, is actually kind of hide this public, prevent this public verifiability. It's a complicated issue, and I see the other side of the argument, but I wanted to really go for that.
No, I kind of changed the topic there, but the original question was, what do you think of the schemes being proposed that, the nodes can verify that this many Bitcoins go into confidential transaction outputs, and this many go out, and 2 + 2 is 2 is 4. So what do you think about this?
So if I understand that right, that's the scheme where there's a CT proof for every output, and that proves that perfectly hides the privacy of that output. And then there's another CT scheme, which is over an entire block, and that perfectly binds the no inflation property. And that would be great, I think, if you could do it. I think probably more research is required, but I think the only way to do it now is to have every block to be one big coin join transaction, and then they need lots of interactivity.
I think that idea is a bit more kind of out there. It was discussed more recently, but you were talking about stuff that was discussed a lot earlier. It was Oleg Andreev, I think, had an idea about how to do this, right? How to essentially sort of firewall the CT coins so that if there's a problem there, it won't affect people who are not using it. That's your idea, right? Or what you're talking
about. So I told you about this in the CoinJoin workshop, but only the intuition. But someone in the mailing list started actually talking about this. So is it an acceptable way to introduce confidential transactions? And let's start with the monkey, and then let's go like this.
But
Well,
I would just like to add that we already have almost something like that with Liquid, right? Sidechains. I mean, that is, you of course have the semi-trusted federation, right? But if you put the money into Liquid, then you have CT and even confidential assets being issued. So that is great. And if there is a inflation bug, it is only on the sidechain with Liquid Bitcoin. But these Liquid Bitcoin can only be pegged out by the federation. And thus, like, the federation could be like the first one to leave if they know that there is an inflation bug, and thus, of course, yeah, there is no inflation on the main chain, but there still can be people scammed who hold Liquid Bitcoin and don't realize that. So I guess yes, side chains are not on chain, of course, or well, the main chain, but it's already something like this. But yeah.
I mean, I think like a big issue with that is like I mean I think it would be acceptable. Like I mean, if you had a limitation on confidential transaction outputs going to transparent outputs that prevented coins from being inflated, like yeah, I wouldn't be affected by it because I wouldn't use it. But at the same time, I think you have to really look at the incentives there. And if everybody knows that, like, if I move into a CT output, I have this risk of just getting fucked at any moment, like, that's a huge disincentive to use that feature at all. And so, like, that's going to really limit the anonymity set and the amount of people willing to get into it. So, really, at the end of the day, like, yeah, it's opt-in, so there's no real argument like, no, we can't do this. But is it really going to fulfill the end goal at the end of the day of creating a very large homogeneous anonymity set? I don't think it would, because of the incentives involved in that.
Yeah, I've got I haven't actually thought much about this issue, but how about just a counter narrative, which would be you could imagine a future where these CT blinded coins are used as money. So everywhere you go at shops accept CT blinded Bitcoins, you can buy milk with it, bread and all that stuff. And the only people who have non-blinded coins are investors, right? So who want to hold Bitcoin and want to know that it never goes above 21 million. You could imagine a future where the cryptocurrency gets broken and whatever, people print infinite CT coins, or maybe not infinite, but a large amount. And you can imagine the shops continue to accept CT blinded coins for bread and milk and whatever. And yeah, all the investors flee, but people who are using Bitcoin as money, who maybe don't want to save in it or aren't interested in inflation-proof properties, maybe they don't care and they carry on using CT blinded Bitcoins. And in that sense, the investors and holders, who they'd lose out because they have these coins and they'd be limited to 21 million, but they can't spend them anyway because they have to put them in the CT chain.
Venezuela, isn't it? It's like,
yeah, because
those coins are being inflated away into nothing. So they're being inflated away. So it's like, oh, I've got some CT. I want 50 billion CT coins.
Yeah, that's right. So eventually, presumably, if the inflation wasn't too quick, then I don't know. It's hard to.
They're more likely to be infinite than finite. So
yeah, okay.
Well, and money on a economical side is a unit of account, which means that entrepreneurs judge the future revenue that they can get from their customers, and then they invest something below that so that they have revenue. And a very, very important part of that calculation is the issuance rate and the total money supply. And so with Bitcoin, the absolute stunning beauty is that we can actually verify precisely what the total money supply is. And that is a huge benefit on the entrepreneurial economical side of Bitcoin. And I think that just that fact alone is such a gigantic positive, and just for resource allocation, a tremendous net benefit. And as you say, then when we have CoinJoins CT Bitcoin being used as money, and then there is an inflation, we will not know that. And this will completely throw off the economic calculation and will lead to massive resource misallocation, because all of a sudden there's much more supply of money, which means that you invested in worse projects because you think you're richer, but you're actually not. So I think just on economical side, which might not be as interesting as the technical side.
So yeah, chances are it's not gonna be broken, and chances are that if it's going to be broken, then it's not going to be broken all of a sudden. right? So okay, never mind.
I disagree. I know that sounds reasonable, but let me make my counterpoint. I disagree.
So
You're
Adam
wrong, Adam.
disagrees, and probably because he wants to bring up the Zcash inflation bug. Yes, but you know, I would and Monero inflation bug.
So the only two big cryptographically hidden implementations of cryptocurrency both had inflation bugs within 3 or 4 years of existence. And do you remember Shadow Cash? No, I thought they were shit.
And Shadow Cash too. Okay, so but I would not compare a small team of hackers to a huge team of open source developers who cannot even decide on how to what color this label should be, and you know, it's just the quality is just so different, right? If we keep, I don't want to go into it, but if we accept this argument, then we have to accept that Bitcoin is totally fucked because it's a complex system and it's more complex than confidential.
Real quick, I just realized that saying you're wrong, Adam, was probably really confusing for the viewers. I meant no para, you're wrong.
I just wanted to say I disagree that it means we're totally fucked in the specific sense that compare it with like the internet. Like the internet was, you know, should have been built with privacy at the base layer from day one. That's what so many experts say. But actually what happened is it grew organically and it was kind of shit. And TCP, I'm sure, TCP/IP is probably crap in all kinds of ways. And we got TLS and it was crap in all kinds of ways and it developed. And it was, what I'm saying is like an organic process. It doesn't look perfect at all from the outside. It happened and it built in layers and we got something that kind of works.
And how does that relate to the Bitcoin?
I'm trying to say that the idea of having privacy on the second layer, let's say Lightning or third, I don't know, or some new scheme that's also second layer might not look, it doesn't look correct from the academics' point of view. You know, people like Ian Myers are quite correct to say, look, you've got a transaction graph that's not private. So it doesn't look perfect, but maybe that's just how the world works. And we're going to get this kind of organic development of privacy and higher layers.
And real quick, no, Para, I kind of wanted to respond real quick to the it's not going to break instantly. And I think, like, you know, when you mentioned like a small team of hackers, like you're kind of missing the long-term like scope and perspective here. Like if Bitcoin really plays out like we all want to see it, where it becomes like some global internet currency or reserve asset, like the scale of everything changes. We're not talking about like a small group of hackers anymore. You're talking about nation states, which are probably where any kind of practical quantum computer breakthrough is going to come from. It's going to be major corporations or nation states and intelligence agencies. And when you look at the incentives at the larger scope here, like some country like China or North Korea working on something like that in a world where Bitcoin is a huge global reserve asset, they're not going to go do something else with it to show that things are starting to be broken. They're going to hold that card to their chest until it's ready to break something like Bitcoin, and they're going to use it for that because that's a much more...
Okay, look, if you're going to strawman that, oh, it's too complex and it's going to be broken, then you should have go for segregated witness as a hard fork and not as a soft fork, because as a soft fork, it's totally broke. It's totally complex. So
his point isn't the complexity, but it's the adversarial nature of it. Like stuff can be really complex, but you can still analyze them. And here we have this inherent trade-off between the perfect hiding and the blinding, and it's not something you have in.
It's not even the perfect hiding and perfect. It's not even the perfect hiding and perfect binding. It's the combination of the complexity with the fact that it's a technology which hides something. This is what I was trying to like lay out in that blog post. Is like when you have a protocol and you have a cryptographic hardness assumption, and then you have like a hiding mechanism. It's specific to hiding. Like SegWit wasn't about hiding stuff. So it could be, I mean, maybe it was too complicated, maybe it was too simple. I have no idea, but it was something everyone could see and everyone can verify what's going on.
And I mean, just economically again, from if I as an adversary have broken the discrete lock and I can create coins out of nothing, then I might assume that others have broken it as well, right? That's often how it goes. So then it's very much in my incentive to be first in the Cantillon effect and start printing as much as possible, especially because no one can prove it and no one can calculate with that, as I said earlier. So the incentive is very much to go all in and print as much as possible and buy your Lambos instantly, because that will just be the economic, very much so incentive.
Yeah, like that's in general in finance, and there's definitely a kind of finance that the future is actually here today. So you can see in things like the oil markets, if they discover a new oil field off the coast of somewhere, the oil price immediately reacts, even though no one's even drilled anything at all. They haven't extracted any oil, but the oil price has immediately taken this into account. So this idea of, oh, it will be broken, very gradually and stuff, that's not true, I don't think.
But I mean, on the other hand side, you could argue that in the same example, so just one person finds the oil field, but no one else knows about it, right? And no one can prove that there is an oil field. So in that sense, the market adjustment might not be as swift as it would be with transparency.
Just the thing with oil is maybe it's a bad example, but they because it's based on land, then people, states have control over it, and normally what happens is the prospector has an agreement with the landowner, and then they put it in they publish it and they get money from it, and that's how they have an incentive to spread the information. And that's not true in Bitcoin.
So I think we are going back and forth on the same topic in circle on the same topics. So maybe we could. Yeah, I could do this all day long, but maybe we could wrap it up sooner. Do we have any questions from the chat?
Somebody's asking about like paynims. So I guess what are your guys' thoughts on paynims as a construct to break the transaction graph and kind of some of the downsides or limitations of that?
So are you talking about like PayJoin and pay to endpoint?
No, the BIP47 addresses that Samurai.
Oh, right. Oh, that's also called stealth addresses and ECDH addresses. Yeah. Based on that. Yeah, that is. I think so. I wrote some on the Bitcoin wiki. I've got the page about that, and there was some things that make me not so keen on that idea. So one is they. What they actually do is they seem to they stop you reusing addresses, and you have one less step of interactivity. So another way to stop reusing addresses is to have your own HTTP server, and every time someone visits it, it gives them a new address. And then that's in terms of what you get for privacy, that's the same thing as these stealth addresses. But they then you have another problem is this: there's this nonce. So both sides have to, the sender has to generate a random number and has to somehow send that to the receiver. And there's a few ways of doing that, but they all have their own problems and they're not that great. But a third thing that that worries me is they can be broken by a thing I've been calling mystery shopper payments. So suppose you publish your paynim address as a donation address, and someone wants to get information from you. What they can do is they can donate to you $1 or $5 or whatever amount, and then watch where the information goes. Like, because you'll spend that coin and send it to your other coins, and maybe join it with other inputs, and they'd get information that way. And you can do that the same with my HTTP server idea, the server that would hand out addresses. So they'd the point is then they are a privacy technology, but they, like all privacy technologies, they're not a magic spell, and they can solve one thing, but they don't solve the whole picture. And just from my point of view, I think it's worth looking. The page on the Bitcoin wiki is called ECDH addresses, because it's elliptic curve Diffie-Hellman addresses. And I think there I summarize, at least my point of view, pros and cons, and why I'm not that keen on them.
Sorry, I don't think I've fully understood why that means you're not keen on them, because you point out they essentially have this similar security model to having a server and just generating new ones, but
they have they have a cost that you need to get the entire ecosystem to adopt a new address type. So, and we're doing that with Belcher-32, and it's been more than a year. And I mean, it's worth doing for something like Belcher-32, but I think the benefits for ECDH addresses are just not worth it when you can have a server that gives out addresses. I don't know.
Yeah, exactly. It only solves the problem of communicating addresses. And I mean, as you said, encryption works solves that pretty much. And all the thing is then you can send then without having the communication first. So that I think the only real use case for such addresses are public donations, that you just post your like long-term quote unquote public identity, and then everyone can derive these your addresses. But even then, I think every sender first has to do an on-chain transaction at least.
One way of transmitting the nonce, but there's about five ways that people have come up with. And I think Paynims in specific, because that's based on bit 47, they have, I think, a choice of 3 ways, and one of them is to use bitmessage, another one is to use op-return. I've forgotten the third one, but there's loads of ideas, and they all have trade-offs, and they're not really that great, I reckon. It's interesting. I've actually remembered something. So Monero, every address is a stealth address in Monero. And I've remembered a funny thing, an example of where someone says, realize, oh, it's a privacy technology and I'll use it and it'll be great. So they wrote a coin stealing malware, which would steal Bitcoin and Monero. And they'd send it to a Monero address, which was hard coded in this malware. And the guy thought, oh, clearly he thought, oh, it's a stealth address. It's perfectly private. And it turns out if you put this stealth address into Google, you found the guy's Bitcoin OTC profile. He put it there, like, if you want to donate to me. It was the same address.
But which is very interesting. Monero guys came up with substat addresses, right? Substat addresses, which basically the exact same thing as we are using in Bitcoin. Yeah. They are generating a new stat address for everything, but it's actually, if you think about it, it has a much better utility because you just give one stat address to one person at one time, and then they can do all kind of things like avoid input joining or send you a month later.
And you know who paid you in that model. There is, if you don't mind moving on, since we're talking about addresses, I've been slowly advocating this idea that I think a big reason we have a lot of address use is because the name address, because people think it's like an email address or postal address, and you like give it to someone, they can send you money. That's my address. And I've had this idea, I don't know if we want another source of disagreement, to rename it to Bitcoin invoice address, and then 10 years later, rename that to Bitcoin invoice. So if you want someone to pay you, you give them a Bitcoin invoice rather than a Bitcoin address. And I don't know what you guys, and I'm asking people on the chat as well if they think of this.
I say, like, let's do it. I mean, what's the worst that happens? Everybody screams no and refuses to move to new language.
I disagree because it's. Are you familiar with what happened with eBay when they were yellow and they changed to be white? So they were yellow and they changed themselves to be white, but the users started to revolt that, hey, we want the ugly yellow back, and so they changed back to yellow and then wrote an algorithm that in 1 year they get a little bit whiter every day. So my point is that you don't break the user workflow. It's you just can't rename anything. It's called wallet, not keychains. It's called address, and nothing. It's not happening anymore.
Come on, don't try and steal
that
my
Lightning
drama.
here. I would say that Lightning will help here because in Lightning it is already invoices, and especially then when we have atomic multipath payment and especially splicing, then you will just send a QR code, which, because it is Lightning, probably is still going to be called invoice. But if it's a large payment request, then you just splice out of the channel, right? So then if we are in a future where most of the funds are in Lightning and you can just easily splice in and out, then I think that solves it, because then we have invoices that contain both the Lightning routing information as well as the Bitcoin on-chain transaction or address. Well,
that's a really good point. I hadn't thought of that.
Actually, I think Janine wanted to jump in with something real quick.
Yeah, sorry, I have video turned off because my connection's bad, so I can't see the good breakpoints. But I think one point I would want to make about why people reuse addresses. I mean, I agree with the fact that they don't really know, what an address is and how it works and why they should be worried about reusing them, and that's an education thing. But I think the other problem is that most wallets don't take coin management seriously. Because either they're designed specifically just to, they're designed as a really easy to use wallet, and they don't care about the privacy consequences, or they're a wallet, for example, like a lot of hardware wallets don't really do coin management stuff. For example, Trezor, it actually only allows you to have 10 accounts in the interface. So you can basically have 10 separate accounts where, whatever addresses you generate in each account, if you try to spend from that account, all of the funds from any of the addresses can be spent. You don't really have an option to choose unless obviously use Electrum, but the default interface with Trezor, that's what it does. It doesn't really help with address reuse because you can only basically have 10 addresses in that wallet that are separate. So I think that's also an issue.
Yeah, I have gotten into a big shit fit with people from both Ledger and Trezor, claiming that that's too confusing and too advanced for users. And it's like, are you kidding me? Like, if people can handle telling different notes apart in their wallet and making a choice, I think they can handle output selection.
Yeah, and I think again that's where user interface can support rather than completely manage it. So for example, if we have like branch and bound or some other coin selection algorithm, and instead of automatically just using it, it's highlighted in the coin selection. So like, okay, the wallet suggests to spend these coins and to consolidate these. That would be, for example, something. Or same with fees, right? We see, okay, we suggest the fees for high priority, medium, and low priority, but ultimately the choice is with the user. Same with Lightning Network and channel management and liquidity management. Yes, autopilot. I mean, it's complete shit right now. So it might be best to have some suggested nodes to connect to. But still leave the ultimate decision to the user. But again, that's trade-offs, right? Because power users want to have full control, but then regular users don't want to have that. So it's difficult.
Yeah, and the reason I bring it up is because in the academic literature on privacy, address reuse is probably maybe the worst thing that people do. Like in terms of, there's actually a paper called The Unreasonable Effectiveness. It's got a name, like The Unreasonable Effectiveness of Coin Clustering or Wallet Clustering or some name like that. And it makes the point that it uses the common input ownership assumption. And if you only use that, in theory, it shouldn't work that well. But because address reuse is so popular, they can just, a trivial algorithm can cluster about 60% of all addresses, like with basically no effort. And yeah, that's why I'm so worried about address reuse, really. Because I've heard of, there's loads of examples of, so an example I keep coming back to is, suppose you have a trader on an exchange and they want to sell some coins and they reuse their exchange deposit address. So it's been used maybe 10 or 50 times before. And when they send their 10 Bitcoins to this transaction, anyone else on the network can see the unconfirmed transaction going to this address. And because it's been reused before, they know it belongs to the exchange. So they say, okay, this guy's sending 10 Bitcoins to an exchange. I'm going to open a short because I know the price is going to fall when he sells his 10 Bitcoins or 100 Bitcoins. And by the time the trader's 10 Bitcoins gets 3 confirmations, the price has already fallen. So he's been front run in a sense because of his lack of privacy. So yeah, I agree with the thing about education. If you explain to people things like that, I'm sure they'd press the create new deposit address every time they deposit. If they think of that, and it's not always available, which is annoying.
Yeah, I think this discussion is like everything comes down to education, implementation, and best practices. It's like, it's making it easy. It's going to make it easy for problems to arise. And yeah, just wanted to bring in a question from the chat. So Max says, do you think the crypto movement as a whole is more resilient with a variety of decentralized assets based off different algos rather than one point of failure? So that's just a question about whether or not, I guess, the whole alt scene is something that builds out robustness for Bitcoin, or is it something that is just, it's like the main maximalist perspective of just that's a point of attack.
I don't know. Well, so the question was about, do different altcoins improve the security of the entire crypto coin sphere? I'd say no, because they, from what I've seen, they don't really innovate around security. Like they all use proof of work, they all use full nodes, and they all use that kind of thing. So you could imagine if Bitcoin was destroyed and maybe a 51% attack or something like that, I can't really believe that the other altcoins would be remain unscathed? Like, wouldn't everyone think, oh, okay, if it happened to Bitcoin, it could happen to all these other coins as well? So from what I see, they don't really they have different algorithms, maybe a different block time or, ring signature or something like that. But their actual security model of proof of work and full nodes is the same. I mean, someone can correct me if I'm wrong, but I think that's.
Well, yeah, I mean, in the basics, of course, most of these cryptocurrencies are pretty much the same. But on the other hand, like some implementation details are different, and we see with Monero or Zcash, like actual new stuff being tested that is not yet on Bitcoin. And if you would not have these, well, test nets, I mean, of course, they're not test nets because people actually lose money, so it's reckless as hell. But at least now we know that it's damn impossible to have CT without inflation bugs, because every cryptocurrency with CT has inflation bugs. Yeah. Right, so it's kind of like it proves our point, and I think that in and of itself already is good, because then we have some experience whether or not we should have these things in Bitcoin. And I would say without Monero, without Zcash, we would not be as vigilant with the threats that are possible. But I agree that most of them don't really do innovation.
Yeah, so from that point is that they're useful test nets, you could say, for Bitcoin, but I wouldn't say they improve the security of the whole crypto coin sphere, because the only is that, like, it's two different points that they're a test net. Yeah, thanks for the question.
All right, I guess we got one more. I think I don't know. I think Adam, hopefully you might have an answer for this, but somebody was asking about the size.
Which Adam?
Waxwing.
The T set of Adams is 2. So.
But somebody was asking about the size of perfectly binding commitments. So I'm assuming they were talking about Algomel commitments versus the Pedersen commitments.
Yeah, that's right. I mean, don't quote me. I think you're talking about essentially an Algomel commitment is a Pedersen commitment and an extra curve point. So it's kind of like crudely double, because the Pedersen commitment itself is a curve point. Yeah. If you want to know more about that, I suggest you read my blog called Finessing Commitments. It's an extremely long, like all my blog posts, but it's the main purpose of that blog post was to get into this whole switch commitment idea, which is kind of related somewhat, not exactly the same, to what you were mentioning earlier about, can we kind of isolate the problem of there might be a security? So it's kind of really interesting topic, but the first half of that blog post goes into great detail about explaining why, if you want to have a perfectly binding commitment, you need to use something like Algomel, and it does imply, unfortunately, larger sizes. But the size is dominated, in CT, the size of the output is dominated by the range proofs. So the recent, or relatively recent, bulletproofs tech dramatically reduced that issue, especially because it has this kind of aggregatability property. So it's there are realistic numbers where you could be looking at like transactions with only maybe 800, 900 bytes of range proofs on the outputs, and that 800, 900 is spread over many different payments, many different outputs. So the fact, I'm not sure, but I think the fact that the Algomel commitments, oh yeah, that's right. Yeah, because I remember now, I was talking to Tim Ruffing about this. Yeah, of course, the problem is all of those really cool optimizations in bulletproofs and stuff are all based around using Pedersen. If we switch to Algomel, we'd lose all that. It's just fundamentally not. It's not going to be as scalable if we choose a perfectly binding option, which is why people have started having these weird ideas like, oh, maybe we can have like a single block commitment that's binding, whereas an individual transaction is hiding, and it's just a big mess. But yeah, good question.
Maybe one thing that I would like to bring up is that so I've been thinking about a way that we could twist the zero link CoinJoin framework in the sense that the sender does not know the address of the receiver, and the receiver does not know the address of the sender. So basically, without going in too much detail, is that instead of the Tor identities Alice and Bob being the same like person, the same wallet, they're actually two different persons. And so the blinded UTXO for the CoinJoin output is from the receiver. And because it is blinded, the sender does not know which one it is. And because, of course, there are a lot of inputs in the UTX or in the entire transaction, the receiver does also not know which input, quote unquote, funded this UTXO. So I mean, I don't know if that was sufficient explanation, but what do you think of maybe other ways that we can make sure that the sender does not know the receiver and the receiver does not know the sender?
Yeah, so if I understand right, it would be how then would the sender know some kind of identity or marker of the receiver? I assume do they cooperate on the server together or something?
Well, I would say that the receiver gives a signature over the entire transaction and committing and kind of like you have to trust him in that sense that yes, my UTXO is included in this CoinJoin transaction, which is the same level of trust as when the receiver sends you his address. He is only claiming that this is his address. So I would say that is pretty much the same trade-offs.
Yeah, I have to think about it.
And I think both Tumblebit and also Greg Maxwell's original description of CoinSwap address this use case as well, where instead of just having two parties, you effectively make it so that, well, with Tumblebit, the original idea was like Alice pays and Bob receives, and a lot of the time we were just thinking, oh, maybe it's just a coin join, so Alice is paying Alice, but it could actually be Alice paying Bob, and it could be totally. Oh no, am I wrong? In Tumblebit, Bob would Alice have to know who Bob is? Bob has to send Alice the thing to decrypt, right? Yeah.
I don't think it matters. I think you're thinking of something else.
Right.
Max is simply saying that if I get a blinded output at registration, then I unblind it, and I give the blinded output to Max, but it's not a blinded output, it's just a blinded certificate. So I give the blinded certificate to Max, and then Max can tell the server to, hey, Max can use this as he wishes, right? So he can tell the server to what to do.
Is it like DigiCash?
Exactly.
Right. So it's like DigiCash. Like you trade with these certificates, and later you can redeem them from the server for real bitcoins. And if so, then it has the similar things as Like if that's your actual idea, then it's the same as DigiCash. Like it's has a problem of centralization, but then the privacy is really good. So
well, if I'm correct in hearing, Max, isn't your idea more of a just like this happens within the space of organizing one coin join, and it's not like something you hold on to redeem later?
Yes, exactly. This wouldn't be a certificate that or a money certificate that you trade as money, but it's Alice wants to send to Bob. Bob generates an address, blinds it with the key of just blinds it, sends it either to Alice, and then Alice sends it to Wasabi, or Bob can send it directly to Wasabi server. Wasabi server signs that blinded output as it would sign any other blinded output. So the Wasabi server does not know that this is a transaction from Alice to Bob, because it looks exactly the same as if it was from Alice to Alice.
So the real problem is that we started to think about outputs. We blind the output, but we don't have to blind any outputs there. We just blind random strings, and the unblinded random strings actually makes you be able to tell instructions to the server to, hey, do this and this with this many amount of Bitcoin. So it's getting much more general and exactly like DigiCash, but only in one coin join round. Yeah.
You like a blog post or something that explains the whole thing.
And I think also when you're done, Max, Janine's got another question from the audience after you get the comment
in. Yeah, you can just go ahead, Janine.
Okay. So the question from the chat from Nothing Much was, what are everyone's opinions on how much our exercising of privacy is sufficient in practice to ensure fungibility, even if the majority is apathetic? Or he added, maybe not ensuring fungibility as much as putting chain analytics out of business.
Yeah. Hi. Nothing much. Yeah. So, but to me, that's why the kind of steganographic idea is important. The idea of techniques that naturally inherit the anonymity set of the apathetic majority, right? So, I mean, pay join, pay to endpoint, or whatever, many other things, but I don't want to go on and on.
Just very quickly, that just to give credit to Nothing Much, because while this was Max's idea, but actually nothing much had this generalization idea longer time ago than Max. And he kept telling this to me. Just I didn't really understand because he's using words like apathetic majority. So yeah. Anyway, go ahead.
Well, on the technical side, Bitcoin is perfectly fungible because one Satoshi is one Satoshi. So that doesn't matter. Where Bitcoin might not be fungible is on the human level, right? Where for example, a exchange says that it will not accept coins that have a coin join a couple hops back. Then Bitcoin would not be fungible. But that's not a problem that, well, I don't think it's a problem that technology can solve because, well, fungibility is solved on the technological level. One Satoshi is one Satoshi. So that I would say is much more a education part on well, yeah, human education for realizing that privacy is a human right and we must not exclude those who claim this right. But I think it's solved on a technical level.
Yeah, I agree with everything that people have said before me. That you'd, I imagine if there were fungibility problems, we'd probably see it as different prices for different coins, and if that were to arise, then there'd be trouble. So I don't know. Hopefully, it won't ever happen. But we can. I don't know what to say. I'm optimistic, but I can't really base that on anything. So.
Yeah, I mean, as a person, like I take privacy very seriously, and I find that, I mean, I usually surround myself with people who also take it seriously, so I don't have an issue. But when I talk to like people outside of Bitcoin, they don't understand the importance as much of financial privacy. And kind of relating to the next question from the chat about how do we teach, they call them basic people. I think the other word is normies. How do we teach normies and especially kids about the value of bankless currency and privacy-enabled fungibility? I mean, I think my motivation is just that because with how I grew up, I found the idea of giving banks my money to be absurd from a very young age. It just didn't make sense to me. And so Bitcoin and everything around it just came naturally to me in terms of wanting to hold my own money and to not want to give my private information over to a bunch of strangers in California or wherever they're situated. So I think part of it is there's people that there's a group of people who stuff like that comes naturally to them, but they just don't know how to use the tools. And then there's another group of people who may know how to use the tools, but they don't understand the importance of using them. So that's a big gap, I think.
Yeah, I think probably I'd be optimistic about Waxwing's point about the steganographic principle, that we could, those of us who care about privacy, could hide within the crowd of people who don't care too much in some way. So PayJoin is a good example, that its transactions don't look like coin joins.
So the real problem is that privacy doesn't matter until it is. And that's when people, when really some shit happens, that's when you start thinking about your privacy. Anyway, it was great talking with you guys, and I don't know what we are going to talk about on the panel tomorrow. But I'm not sure it's gonna be better than this. So I give it to the monkey. You wanna wrap it up or ask questions or do what you want with your show?
Well, actually, it's all of our show, you goofus. But yeah, I think there's one more. Not really a question, but somebody kind of wanted to hear your thoughts on Xiaomi and eCash servers, and really like what's it gonna take to really.
Shinobi monkey, right? There's somebody.
That somebody is you, right?
Yeah.
I am very obsessed with this concept, but no, it was an actual audience member. But like, what's it gonna take before we really can get that like out in the world and used pretty much at the end of the day?
Well, please.
The answer is you have to hashtag learn to code.
Oh, you're going to get banned off Twitter. Be careful there. Well, I think I mean, of course, the main problem with DigiCash is that it's centralized, right? And that there is a problem of inflation, and maybe we can solve that with some clever multi-sig scheme and revocation scheme, right? That in the case that the mint is attempting to inflate, that there is an enforceable revocation transaction where honest users could prove that there is inflation going on, and then kind of like reverse the or not reverse, but like change the outcome of the transaction that is published on the blockchain. I'm not certain if it would work, but I guess we can do a lot with the game theoretical approach, because I would say the main reason why DigiCash failed was because it was based on fiat banks, and they suck. But now with Bitcoin, we can have much more sound foundations where we might defend against that inflation. It might not be perfect, but especially with some game theoretical approaches and some penalties or security deposits, there might be something. But yeah, learn to code.
I think we cannot predict it. It's really just a gamble. It's like just a 16 years old programmer wakes up one day and he says, "Fuck my father, who is a banker. I'm going to build a better bank with Chomyanikash," and that's how it's happening. It's just someone with a huge motivation and persisting for a long period of time is gonna build it, or not. But until no one tries it, I don't think we can predict it based on past behavior. And then, is it gonna be shut down after that? That's again something that we cannot predict, because it's just a gamble again. Chris,
I've got a point, which is the thing of a Chaumian servers. I mean, it's not a killer. It's just why I think it isn't around today. Is it requires adopting a new kind of wallet. So when you pay someone with the Chaumian server, you need a new. It would be like a new kind of Bitcoin address or invoice. And I think people that's a lot of effort, and people I think are more interested these days in Lightning, because that also requires you need to get people to adopt Lightning invoices. And I don't know, maybe after Lightning is more mature, people say, hey, let's work on this thing. And a second thing I want to mention is I've heard rumors of someone who is working on it, but I can't say who, because they tell me in trust. But
Awesome.
Yeah, next year you never know, because conceptually it's not hard. Someone has to do it and code and implement the crypto, and that's that.
2 weeks, of course.
2 weeks, yeah.
Can I just mention, I mean, not to put a dampener on everything, but it's not like nobody tried before. There was Loom, there was True Ledger, there was Open Transactions, all that before Bitcoin. All Open Transactions sort of spans Bitcoin, but so it's a bit of a dampener. But I think there's something deeper going on as to why people don't actually end up building systems that get used here. I don't know why.
I have one point that it might be used in join market one day, because if Waxing remembers this proposed line I made, which is a way of having join market with off-chain fees, and that has a benefit that it's hard to see the inputs of stuff. So in that very narrow use case, it might end up there as well. It's on if you go on gist.github.com/Chris Belcher, it's one of the gists there. You can read it.
Nice. So I guess any of you guys have anything else you want to talk about or chime in, or should we start wrapping it up?
Just say, it was a great discussion. I think it was awesome. And, I got some people in the chat, they want your shoes, Nopar. I don't know what that's all about.
Today I was like, those shoes are amazing.
But thanks again. Yeah, y'all have a great day. I mean, this conference looks fun. I wish I was over there to enjoy it with you guys. Maybe next year.
I want to quickly break Nopar's stereotype about the son who rebels against his banker father. I'm more looking forward to Jamie Dimon's daughter going more into Bitcoin, because apparently she already has some.
Yeah, great points. And I agree. So at these conferences, there are always way too many awesome discussions. But this conversation right here was really damn good. So thank you all here for participating. It was really awesome. And yeah, great to share this knowledge and to work on this together. So let's fucking make it happen.
So I guess everybody watching, let everyone know they can watch this talk instead of watching their panel tomorrow at 1 p.m. Malta time. Thanks for helping us front run the conference. But I guess, yeah, thanks everybody for coming. This was really fun and interesting impromptu talk. And I guess audience, thank you for watching, and we will see you all next time.
Bye.